So when most people end up selling their primary residence, one question they have is, will they owe capital gains? Will they owe taxes? And capital gains is essentially when you sell an asset at a profit, there's potentially a tax there. Now, when it comes to your primary residence, it's a little bit different, right? So you start with, to figure out if you owe a tax, you start with what you paid for the property originally. And then you add any capital improvements, so major improvements to the house over the years. And then you add closing costs when you actually sell the property. And then the difference between the sale price and, again, what you purchased it for, the capital improvements plus the closing costs, if there's a gap there, then you get to exclude, if you're married, 500,000 of that profit, or if you're single, 250,000 of that profit. And only if, when you add that 250,000 or 500, if there's still a gap between those numbers, then you will pay a capital gain. So in most cases, most clients don't end up paying a tax on their primary residence.